Wagwan guys, welcome to the video. My name is Demetress Fairman and welcome to part 3 of this stock series where I talk about stock market for beginners. I have a playlist going. So far we have episodes 1, 2 and now it's going to be 3 in that playlist. So just head on over. If you don't have any time to watch this video, you can always watch it at a later date. Thanks to everybody who has subscribed, who has liked, who has shared, and who has commented on my channel so far. Without you guys, we wouldn't be at 1,300 subscribers. So, without further ado, let us jump into the knowledge bombs and let's be stock market investors together. We went over many aspects of the Jamaica Stock Exchange. So now we want to know, where can we actually buy shares from? This is a question that I get a lot in my Instagram DMs, emails, and sometimes over my comment section. So we get our shares or purchase our shares from brokers. And brokers are just people who fulfill all your purchases, whether it be buy or sell orders from the stock exchange. But these brokers have to be registered with the FST, which stands for Financial Services Commission, and they also have to be registered with the Jamaica Stock Exchange. And when you say brokers, people will be like, yeah, brokers, but where are they located? What are they? Trust me, they're in plain sight because you probably have a bank account with one of them right now. Most of the brokers in Jamaica are financial institutions, which are banks. So you have your JMMB, your Scotia, your JN, your Sagicor, your Barita, your Mayberry, just almost any of these financial services or these financial institutions, they have a brokerage alongside with them. So they can actually buy and sell shares on your behalf. So get cracking like whipping Chef Ramsay.
How rude are you?
That's the lowest of the lowest.
So another question frequently asked is, how do I buy stocks? And I made a video on this where I go through a step-by-step, dot-by-dot, inch-by-inch process of how I purchase stocks on my JMMB platform. It's otherwise known as the JMMB Emma account. So I like their system. They're the only brokerage that I go with currently, trying to go to others to compare and analyze and see what is best for me. But so far I have no problem with their system. So in that video, if you want to watch, the link is right here. In that video, I go over everything possible that I do when I buy or sell a share. I go over the different buying options, whether I want to buy it now at the current market price, or I want to buy it at a later price or sell it at a later price, or I have the price action in for, let's say, a day or even a month. If you want to watch that, you can just save the link for another time until I'm finished with this video, or if you want to jump straight to it right now, just open a second tab in Google or Safari and head over there. But the thing to note with investing is that not because you can buy shares means that investing is right for you. I made another video to talk about when should you invest or if investing is right for you, link right here. But how much do you actually have to earn to buy shares? So basically a rule of thumb that I go with is, if you make a surplus, small or large, then you have to take into consideration, do I have any debt to pay back with that surplus of cash, or is this just cash that is just going to sit in a bank account and accumulate no interest? Then you should take into consideration that, yeah, I probably can invest this money. But be careful guys, you should have this money as if it's money that you're willing to lose, because the stock market does not guarantee you a profit. So before you invest, just make sure that you have a steady cash flow and you have money to cover your bills, your living necessities, your party money if you want, if that's very important to you, your food, anything that governs your natural way of living that maintains your lifestyle. So once you can maintain your lifestyle and you still have a little bit of money left over, then you can think about buying and selling shares. So it's not just one asset class or one income level that allows you to buy and sell shares. You just have to do your budget, figure out your expenses, know what you spend on a given month or a given year, and then you can budget out a sum of money or a small, big, extra large amount of money to decide if you can invest. Prerequisites are out of the way now. We've covered most of them, so let's just dive into some stock terms. And the first term we'll talk about is a stock split. So I know you've heard of this based off Tesla doing a stock split and also Apple doing a stock split. So let me just read over here and give you a quick analysis or a quick example of what is a stock split. So this is the division of the existing shares of a company into larger number of shares without changing the capitalization of the company. So basically they give you more shares in that company without affecting the market cap of the company, and the market cap basically is the number of outstanding shares times the current share price, which gives you a valuation of the business. So let me give you an example. A company is going to do a 4-to-1 stock split, and they generally do it in ratios, so 4-to-1, 3-to-1, 2-to-1. So this company is going to do a 4-to-1 stock split. So that means for every one share, you will now get 4. And this company has a stock price of $10. So now that they're doing a 4-to-1 stock split at a $10 stock price, that means each new share will now be worth $2.50. That's the new share price. So they do this to basically attract a lot of people towards the stock when they think that the stock price is too high. It looks more attractive to us retail investors. And let's say that company has an outstanding shares of 1 million shares. Now it will have 4 million shares. However, the company would still be priced the same because that $10 is now $2.50. So it doesn't affect the market capitalization or the market cap of the business. It just affects the number of shares. Just makes it look more attractive for investors to be like, this company is on sale. Technically it's not, but however, after doing stock splits, the price generally tends to go up because people like us see it as a sale and see it as being affordable, so they bomb rush the stock, buy a lot of it, and the price generally goes up right after a stock split, which is what the investors of that company really want to happen. So another important term to note is the record date, and basically this is the date by which a shareholder must be officially recorded on the company's share register in order to be entitled to a dividend, a bonus, right, or other distribution. So for example, if you go on the JSE website or you're on the JSE app, and for instance Scotiabank declares a dividend and it speaks about record date, basically it means that you as the investor must be on their records as an investor or a shareholder on or before that date. And I would say I think it's before that date. So you have to be an investor before that record date to be in their system as saying Demetress Fairman is a shareholder of 2,000 stocks of SGJ. So now that you know, whenever you see a declared dividend, be sure to mark that date to be like, okay, if I get in before this date, I will be an investor. Therefore, I will get some sweet dividends. So the last point in this video, we're going to talk about being a secret agent, being the man who only drinks whiskey on the rocks, being Bond, James Bond. But anyways, we're going to talk about a bond. And basically, a bond is an interest-bearing government or corporate debt security. It is a loan from the purchaser to the issuer, which obligates the issuer to pay the bondholder a fixed interest at a specific interval and to repay the principal upon maturity. A bond issued by a company has no corporate ownership privileges in the case of shares. So basically, in this case of a bond, the roles are reversed, and the roles I'm talking about is when you go to the bank to get a loan, you are now the bank and the company comes to you for money and they pay you an interest, and at the end of the cycle of the loan, which is the bond or the maturity, is when you would get back your first or initial, your principal investment. Another example of this, and I will call them a supercharged bond even though it's a stock issue, would be the JMMB preference shares, the one at the 7.35%. It's almost like a bond, being that you would invest some money for a maturity date, and their maturity date is 7 years. So you would invest the money for 7 years. Over those 7 years, you would get 7.35% interest, fixed rate interest for those 7 years. Every year you would get 7.35, and when those 7 years are finished, then you will get back your principal investment. It's more of a controlled, safe, and slower based investment. So this ends the video. Thank you guys for watching. Thank you guys for sticking it through and being loyal fans of this channel. Give yourself a high five. Yeah. Anyway, this has been Stock Market for Beginners Part 3. Thank you for watching. Like, share, and subscribe. And until next time, signing out.